industry of revenue. So when you go down, what you have to do is bring your registration form or your articles of incorporation, and they're going to ask you why you want this permit. And what we see, another major shift. 10 years ago, you would never see a manufacturer sell directly to the public or importer selling directly to the public. Today, almost every one of them are selling directly to the public. So they do need this vendor's permit. And again, it's free as long as you show them that you are in business and that you do require it in your business. The other license area that you need is a GST license. Okay, it doesn't matter what business, you do need a GST license. As you know, as of January 1st, 1991, in order to replace the manufacturer's tax, it used to be 13.5%, they replaced it with this goods and service tax at 7%. So in every product and service that you sell or offer to your customers, you have to collect 7% on the sales tax here. Okay, and the third one here is merchant services. It's not an actual license, but you need to make it as easy for your customers to pay for your products or services. Nobody has $500 or $1,000 in their pocket cash all the time. So rather than losing the sale, you want to make the sale. So here you want to set up merchant accounts with different banks. This means you're going to allow your customers to pay by Visa, MasterCard, American Express, by checks. Now, normally you don't have the volume that retailers have when you're starting out. So what you may want to do is consider joining organizations like the Retail Merchants Association, Better Business Bureau, the Board of Trade or the Chamber of Commerce. These are large business organizations who have negotiated on behalf of their members a good discount. So normally, if you're new in business, you have to pay 5% to allow your customers to pay by Visa. But when you join these organizations, you pay about 1.5%. But at the same time, if you need benefit plans for yourself, because as an individual, you still want dental benefits and coverage here. Here, again, you can get a pretty competitive rate for yourself or for your family coverage in your own business. Business insurance as well. They've negotiated a very good rate for business insurance. So you should be aware of some of these other associations. But when you came in, Kyle also gave you a little form here, phone numbers and address that you might be of interest here. Judy Diamond writes a regular article in the Toronto Star every Monday. So those of you who are in business for yourself, you should be keeping up to date for entrepreneur information here. This is the back issue, but there's some other numbers on here that you might find interesting. They're transporting products. You need a certain license there. If you're importing products, again, you need certain licenses. There's workers' compensation and even some unrelated numbers. But it's good and handy to have available at your fingertips. Step number 8 here is setting up a bookkeeping system, opening up a separate checking account for your business, and keeping your receipts. So the first one here is setting up a proper bookkeeping system for your business. Those of you who went to college, university, or you might be taking the evening course on accounting right now, what they teach you is a double entry system where you have debit, you have credit, you have these journals, you have all these fancy ledgers here. And it's great if your company is doing $1 million in sales. But in a one-man operation, you might only have 2 or 3 products or 2 or 3 services that you're offering. And it's a very complex but more time-consuming accounting system. All you want to know from a bookkeeping or accounting system is whether you're making money or losing money. And they have a tendency to confuse you by the time you graduate and learn how to use the system. So here, what we recommend starting out, and it is only starting out, just go down to Granitoid. You get 24 million envelopes. Just mark on the envelope January right through December. On each monthly envelope, you have a sales envelope, and then you have an expense envelope. So we're going to be selling products at a flea market. We're going to spend some money on renting the booth, so we put that receipt into your expense envelope. We spend some money on purchasing a business card or some flyers or brochures. All these receipts that is considered an expense, you put into the expense envelope. Then on the weekend, when you go and make some sales, you have all these sales receipts, and you put it into your revenue envelope. At the end of the day or at the end of the week, you add up all your sales, minor expenses, and it shows how much you've made. You yourself need to take a vested interest in managing your books. Again, we normally discourage using an accountant at this outset, because you should know how much you have right to the penny in your account balance. You can't rely on an accountant to do this. And more importantly, these guys, all they're responsible for is managing your books. It's up to you to tell them you want to write off your vacation or if you want to write off your VCR. It's not their job, and I can't emphasize that enough. There is what we call a tax specialist, but this guy is not an accountant. So that's the next one if you do feel you want to be creative in your taxes. But the accountant himself, all they learn is how to manage their books. But it's your job as an entrepreneur to tell them what expense you want to write off here. But in the accounting system, all you want to know is if you're making or losing money. So this way you'll know if you're in a position to buy more products, be in a position to spend more on advertising, or basically in going into another area of business itself. The second one here is opening up a separate checking account for your business. Now here, when you go register your company, whether it's a sole proprietorship, you just bring this little form with the government stamp here, or your articles of incorporation, you just go to your local branch that you may already be doing business with now. But what you want to open up is what they call a current business account. Now you may want to spend about another $10 for some of these fancier checks. Because many times what happens is when you write out a check to a company or to an individual, if ever you're audited, you have to prove every one of these expenses. And if you can't tell them what this check was written for, because you could be writing to your brother or sister as far as they're concerned. So you have to prove every one of the expenses. So on some of these fancier checks, normally there's a little ledger that you can write exactly what that item is for. Okay. So again, if you can't justify expenses, disqualify that item. But at the same time, while you open up this current business account, what you may want to open up is what we call a U.S. dollar account. This will avoid the exchange rate. Because many times you're buying products from the U.S., but about 90% of the countries that you're going to probably be dealing with, the standard is the U.S. currency here. And when you get this U.S. checks from your customers or from suppliers itself, when you deposit in your Canadian current account, it's a nightmare on the day-to-day trying to figure out what the exchange rate is. So when you get a U.S. check here, all you just put into your U.S. dollar account. Normally you're going to have to be paying by U.S. dollars to your suppliers anyways. So here you just write it on the U.S. checking account. So you may want to do this right at the outset. The third one here is keeping your receipts. And this part I have to emphasize because we see too many entrepreneurs. Because a lot of times when you're starting out during your break or during your lunch, you go down to the mall because you know you have to do some photocopying, and you might spend 80 cents on photocopying, and you think it's no big deal, so you just pay cash out of your pocket. But I can assure you, if you fail to keep that receipt, you're failing to keep all kinds of receipts here. So it's these little expenses that normally is going to sink the ship. But more, at the end of the year, again, if you make $50,000, if you don't have these receipts, you're just going to pay taxes just like any other individual. When you fail to keep a receipt, you might as well just throw money out the window. That's really what it amounts to. So normally it takes about 21 days to get in the habit. Again, I want to encourage you to keep all your receipts. Also, on the receipts that you get, again, because a lot of companies you're going to be dealing with at the beginning, you're not going to deal with a large company. So you're going to be dealing with some small guy. And just like you're going to go down to Grand Toy and get these blank forms that anybody can use for their business. And on those receipts all the time, they just stamp the name of the company and they put $100 in sales for this particular item. If it's not written on the receipt or from that cash register itself, because there's still some old cash registers lying around, if it's not written on that receipt item what that item is, get in that habit of writing what the item that you actually bought. Because a lot of times at the end of the day, you're going to have a whole box of these receipts, and you're just going to sort of throw it in the shoebox or this envelope. And when you go through these receipts with your bookkeeper, you'll find that you won't know what this item is, and it's just, you might just throw that money out the window. Okay, so again, we encourage you to keep your receipts. Yeah?
All those receipts need a GST number on them?
Yeah, you should get a GST, because again, you can claim back as a tax credit when you pay GST on there. Okay. So you should make sure that you get the GST number from the person you're buying your product or service from.
If they get much, and their detail page receipts, you have the GST number?
Yeah, yeah. And I guess the main thing here I want to emphasize is whenever you buy products and services, what we're talking about here is after-tax dollars here. Because again, if you're working right now, you make $30,000. After tax, you're only taking home $20,000. So same thing in business here. We encourage you to learn as much as you can about taxes because it's the difference of paying tax or no tax. And the richest people today in North America pay little or no tax, simply because they learn a little more about tax than you know. Step number 9 here is obtaining your employer's KIPS. Now, we bring this reason up for, I guess we bring this up for 2 reasons. The first one, again, you want to get hold of this material while you have the time, because when you start your own business, believe me, you're not going to have time to figure out some of this information. So you go down to the Ministry of Revenue, it's about 2 inches thick, so this is just one of these little booklets out of this package here. And this booklet here shows you how much to take off for Canadian pension, unemployment, federal tax. By law, if you're an employer, you have to send out what we call T4 slips to all your employees. We have to remit to the government what we call a T4 summary. There's TG1 forms for people who you hire. When they start out, they have to forecast what their projected income is. So you have to figure out how this paper works here, because this paper can be very time-consuming. But more importantly, as a corporation here, you're going to hire yourself as an employee of this company here. So here, in filling out this TG1 form, what you may want to here opt for what we call the zero tax code, which means you don't want to take any taxes off yourself. Because what you'll find right now, when you file your tax return, you're probably getting a $5,000 or $10,000 refund. The reason is you pay too much taxes over the course of the year, and they're just refunding you this money without any interest. Okay, so here you may want to hire yourself in your own corporation and opt for the zero tax code. If you do your taxes right, you probably won't have to pay taxes or pay very little. The more you have use of your own cash flow here than letting the government use it. But on the other part here of filling out these forms here, like Canadian pension, unemployment insurance, it's very important that you file these on time. That's why I'm saying you have to read these documents. Because here, if you're 1 day late, the first penalty, they'll let it go by, but they'll charge you 10%. The second time you file late, it'll be 20%. The third time, they're not even going to file a penalty. They're going to shut you down. Because what happens is, This is not your money, it's the employee's money. What happens if, say, I just decide to close down this company, and I've been keeping all your contributions for unemployment insurance, and then you go and apply for unemployment insurance. As far as they're concerned, there has been no remittance on your behalf here, so they'll disqualify you right away. So it's very serious that you understand how this paper works, and now is the time to learn how this paper actually works. The second reason we bring up step number 9 here, when you start your own business, the only way to really expand your company is by multiplying your time and effort. Again, you really have only 8 hours a day, or if you're working part-time, maybe only an hour or 2 a day to apply to your business. So eventually you're going to have to hire employees. Chances are you can't afford to pay good wages to these employees. What they say is, if you pay peanuts, you get monkeys, and that's really ends up happening. But more, you want to attract the best talent, the best skill that's out there at the same time. So some of the strategies that we teach at the Institute is consider offering equity sharing, or what we call profit sharing in your company. As long as it's better to have 60% of something than 100% of nothing. So as long as you own 51% of the company, you're always in control. But here, by offering these guys some equity in the company, you maybe get by on offering them a lower wage. But more, it's an incentive for them to stay around a little longer. Because, for example, I used to have a maid service. Well, 6 years ago, I bought this franchise, and the franchisor told me I'm going to get these secretaries who are just frustrated working in the corporate world, or I'll get home workers who just look to make some money on the side. Who I end up hiring were these ladies on welfare, on mother's allowance, and they would work for me as long as to take them to requalify for these benefits. And it was so costly to keep retraining these employees. And anyone could tell you what happens is, I guess, we would have to spend, say we send a mailing piece to about 10,000 households, and then we'd get about 40 to 50 calls, and we'd convert these people to what we call a regular customer. And a regular customer, we go to their home to clean every week, every 2 weeks, or to their office to clean every 2 weeks. But over the course of a year, this customer's worth me $2,500 to $5,000. And here, this lady, she knew she only had to work 2 more weeks for me before she could qualify for her benefits. You can be sure she's only doing a half-assed job here, and she'll probably forget to the washroom or the bathroom here. And sure enough, the customer's going to cancel out here. So you want to gain the loyalty of your employees here. So the incentive here, if they're going to own 5% of the company or 10% of the company, to qualify for that, they have to be with us for at least 1 year. To qualify, or for say at least 2 years, but to qualify for some profit sharing, they have to be around for at least 6 months or a year to get the profit sharing. But it's an incentive for them to stay around. But more important, you're gaining the loyalty that you normally otherwise not have. And again, with your company, you'll find there's never enough time in the day. So let's say you're on the phone, and your employee works 9 to 5, 5 o'clock rolls around, you're still on the phone, and now that one call you've been waiting on all day, if it was a regular employee, he'll go out the door. But if he knew he owned part of the company, or he shared in the profits, he'll say you stay around until you get off the phone, take some messages for you. A lot of times, whatever business, there's usually some boxes to package or mail to go out. And again, if it's a regular employee, he'll probably be out the door. But if he owned part of the company, he may come in the evening, come in on the weekend, to make sure the package are out. Because again, usually when the customer calls, they usually want the product or the service yesterday. So again, by using some of these strategies we're talking about, you're going to get that loyalty that you normally would not. And the cost of training, large companies can't afford to offer training, let alone a small company. So you may want to implement some of these strategies that we're talking about. Step number 10 here is acquiring specialized knowledge. And I guess we bring this up, and it's probably the most important step. If possible, try working this business before you actually get involved with it. First, I'll let you know right away if this is the kind of business you want to get involved with. Okay. But the second one here, you're going to have access to trade secrets that normally you would not have from standing back outside. So here, and whether it's an existing business or just a new startup itself, it takes years to find the best suppliers. You're constantly, a lot of times when you start up, you'll find it's easier to deal with a guy down the street out of convenience, but I tell you, you're paying for this convenience. If you know how to source products, you can save anywhere from 30 to 80%, just learning how to source your products here. But here, if you work with a successful, say we want to get into a restaurant, so we're going to work in this successful restaurant here, we already find out where the best produce supplier or the best meat supplier is. We find out how he cooks his food, how he handles the customers, how he markets and advertises his business, what bank he's doing, dealing business with right now. Because there's nothing more frustrating to go into your bank and tell him that restaurants is a proven operation. But here, if you go to his bank, he's already financing 3 or 4 other restaurants here. So by only working this business, you have access to these trade secrets that normally you would not have. So again, we encourage you, if possible, try to work in the business before you actually get involved with it. So those are the 10 basic steps that you actually need in order to get set up, whether it's your second business, your third business. But again, we encourage you to take your time on these 7 to 10 steps, because we see too many entrepreneurs making these mistakes, and it's this foundation that you have to lay, and it has to be solid, because the whole company is going to be built on this one. So some more startup tips here before we move on. Obtain a copy of the Industrial Yellow Pages of the city near issue. So in this case, it would be Toronto. So if you're a small town, you want to get minimum copy of the Toronto Industrial Yellow Pages. So this is not the consumer Yellow Pages that you use right now to buy a pizza or order towing service. It's the Industrial Yellow Pages. This is where you can find